Welcome everybody to another No Shill Zone. I'm here with Ben Cowen. How you doing, buddy?
Pretty good. How about you?
Good, man. We were just talking about how Bitcoin has pushed up here, and the question is it a new bull market? Is this the magic pill right now to pop this thing through? And again, we'll talk a little bit about more, where we could go. That's my sort of technicals in the short term. But Ben, are we all of a sudden, is everything fixed in crypto?
Well, I mean, we actually talked a lot about this outcome, just over the last few weeks, right? This rally into a death cross to sort of draw that liquidity back in. And I'm still, that's my story and I'm sticking to it, right? This was actually a very similar move that we saw in 2019, right? Where we had this death cross where the 50-day went below the 200-day SMA, and we saw a fairly significant rally into that. And then we ended up going lower in November, right? We ended up taking out that low and putting a lower low here in November. And, we basically did the exact same thing, right? I mean, we talked about sort of selling off into the death cross, right? Or just a few days before, pumping into it and then fading. And that's still what's going on at this point, right? I mean, now look, things are always subject to change. But at this point, like I feel like expectations have been met in that, that look, the other thing too is the markets move stochastically. Right. It's not a linear path. And that's what we have to sort of accept. So I'm still thinking that the main purpose of this pump is to, as I've said before, is to break altcoins down on their Bitcoin pairs. And that's what's happening, right? Like look at the altcoins. A lot of people keep saying, well, what's the narrative fueling the Bitcoin rally? I'm like, well, look at the altcoins, right? Most of them are red against Bitcoin on the day. And so I still think a lot of this is just liquidity leaving the altcoin market and going back to Bitcoin. What do you think about this?
No, I think ultimately, the charts themselves when it comes to Bitcoin. So we could see this. And in fact, in my game plan in my morning session, and I'll throw up my charts here real quick. I talked last week on Thursday and I said, listen, Bitcoin has now broken above a key trend line. It's now short-term bullish. And I'll just show you guys that. So basically we have this orange trend line. In fact, I'm going to change the color of it so it really highlights here. We'll go to, I don't know if you guys can see that. We'll go to pink. What the hell? So here's your pivot high. We hit it here. We hit it here. We hit it here. And what we know from trend lines is that the more we hit a line, the weaker it becomes. The same thought process, like I said before to you guys, is that when you ram into a door, it's probably not going to break down on this. You're like Superman, right? Or Arnold Schwarzenegger. So you have to ram it a few times. The more you ram it, the weaker that lock becomes until it breaks. Here we closed last Thursday above that line. Short term, and we're talking very short term, you have a short term view of, let's say, 1 week out, all of a sudden it flipped to being bullish. And we see the follow through on Sunday night into Monday here today. Now, my issue is that we're now coming into some new resistance. Not only was this little pivot top a little bit, we're above it slightly, but you have all this kind of all this low consolidation right here around 29,000. That's also going to be all this sideways chop is now going to be resistance right up here. So again, could we go a little higher in the near term? Yes, charts right now are still slightly positive. But ultimately, I'm skeptical mainly because we have broken this upsloping orange trend line. And I think we could even go as high as retesting that, which would really get the bulls on board. But if we can't get through this area, this 31, 32,000 level, then this to me, again, is a break trend line retrace to the scene of the crime that eventually could roll over. I will say this, though, is that last week I highlighted a few altcoins, right? We talked Cardano. Look at this. Look at the wedge pattern we had talked about. And I was very specific in talking about this in the last No Shill Zone last Tuesday, saying that you can keep a tight stop here. And basically any daily close below the low of this wedge pattern, you just stop out and you can try to see if you can let this breakout occur. And sure enough, it did. Same thing with Matic, Polygon, same kind of deal. Broke out, stayed above, and then kind of popped. Now, again, I'm in the position of saying, you like Ben, it's probably smarter to take profits on this run, inch in, inch out a little bit, let it run a little bit more, inch out, versus just hoping that this is a new bull market in the altcoins. But certainly interesting stuff on the charts, no doubt about it.
Yeah, I mean, look, returning to the breakdown point is something that actually we saw with ADA a few weeks ago, right? So you mentioned like the Bitcoin, and we talked about this previously as well. Like, when we get this rally, it could return to sort of where it broke down from, right? And actually, ADA did that exact thing not that long ago, right? So if we remember this dump over here that we got in June. And then we look what happened with ADA, right? It retraced all the way back up to where the breakdown point occurred, right? It sort of swept that level, only to then go all the way back down. And
Right.
one of the other things I think it's important to point out with ADA as well on a larger time frame is that we've been sort of bouncing off of these lows for a long time, right?
Yeah.
And this bounce here, that weekly candle, that was a 19% move off of that low. This one here, this was a 12% move. This one last week, a 9% move. So to me, what it looks like we're just continuing to put in these, lower highs, and that eventually this could easily, break the downside. Right now, again, right now, no one wants to believe that because we are in the middle of a move up. But I would also say that it's fascinating to me, the market psychology, right? It was only like a month or two ago where a 27-cent ADA would have been seen as very bearish, right? And now it's being seen as a very bullish thing. So yeah, I'm still in the same camp. And if you look at the altcoin market sort of collectively, right, what we'll notice is that it still is below the 50-week moving average, which is something that it hasn't really been able to sustainably break above. And I believe it's also below the 20-week SMA or the bull market's work, the 21-week EMA and the 20-week. So you can see it's still right around there. So look, at this point, I think it's more likely to be a lower high than anything else, right? And so this high over here for total 3, the altcoin market was all the way up at around 378 billion. Now, do you remember that high? That was when we got the SEC Ripple news. And on that high, a lot of people flooded into the altcoin market because this is fundamentally changing everything and there's no way alts can go lower. And then look what happened, right? We just completely faded back down. And so I still unfortunately have to be in that camp that this is just lower highs until proven otherwise. And, in the same way, if we keep testing this trend line here, we could eventually break down below it.
And I think what you said is very important is that, you're in my job. We're strictly about the charts and what they're showing us. And it doesn't mean that you can't tell us something else. Like, I mean, it could break those levels and all of a sudden, we'd have to change our tune essentially. But we have to stay true to the data. We can't just go on what we hope, what we dream. Oh, wouldn't it be nice if I bought a ton of ADA and just had it go to the moon? That's hopes and dreams. We don't make money that way. We make money by putting probabilities in our favor, and how we do that is by using the data to kind of give us that little bit of an edge that makes us a winning trader. So I think that's a great point on that front.
Yeah, and I mean, another thing to sort of point out here, and we've been talking about this for how many months now, is the dominance of Bitcoin, right? I mean, this was a perfect example of a breakout of a 2-year-long consolidation period, a retest of it, also holding support on the 21-week EMA, and then slowly trending up, right? So and we've talked about, liquidity. Liquidity is everything in the altcoin market, and the dollar, I think we got to talk about the dollar. I mean, we're in the 12th green week now for the DXY. And as the dollar goes up, liquidity gets drained. As the liquidity gets drained, the dominance of Bitcoin goes higher. And, the dollar is now in its 12th green week. Bitcoin dominance just finished its 6th green week in a row.
That's right. Yeah, absolutely. And I would just want to show my dominance chart because I have something cool to show too, is that if we just look at it from a purely technical point of view, so we broke out on dominance here, right, back in June, and that was that big move up. And then there's this tendency, and I use this a lot when we do these no shill zones and other things. I talk about how it's important for charts to kind of go back to their home base before they get their next leg up. And so what did we see happen on Bitcoin? Bitcoin went down. The low on dominance is exactly the highest point on the consolidation right here before we've started to move back up. So it retraced to, again, I call it the scene of the crime before going up. And interestingly enough, too, is look at the chart here. If we take this trend line and just connect it through these recent highs and we drop it down here, you can see how it was kind of making this bullish consolidation. And now it's broken out above this downsloping trend line right here. And it now can run, in my opinion, it probably does run to new highs above this 52% level.
I think it probably will take out that 52%. I did want to address one common thing that I see people kind of ask about Bitcoin dominance. And that is in 2019, you can see that it actually topped out in September. Normally, dominance reverses course in September. Whatever way it's going into September, it reverses course. And we talked about that a lot, right? But we sort of bled into September, and then September ended up now being a green month for dominance. And look at October sort of continuing that trend. But that's not really what I want to point out. What I want to point out is, why did dominance top out in September of 2019, right? Was it just because of the cycle? I think one of the things to really point out here is the Fed, right? So if you were to overlay interest rates by the Fed, by the Federal Reserve, you can see that dominance did not top out until after the Fed started cutting rates, right? And so that kind of showed us, hey, we're going to looser monetary policy. Therefore, higher risk assets will start to outperform, or at least keep pace with the lower risk assets, right? So altcoins started to bottom out against Bitcoin after the Fed pivoted, right? So a lot of people keep thinking that dominance has topped out here at 52%, just because now we've sort of moved past that September point, and that's where it topped out back over here. But look, I look at this and say, alts can bleed as back to Bitcoin as long as we are in tighter monetary policy. And that's what this shows, right? Dominance was going up as monetary policy was getting tighter and tighter. And it only really went down once we went back to looser monetary policy. We're still not yet at the point where the Fed's going to pivot. And so I think for that reason, the dominance will likely, as you said, I think it will take out that 52% level.
That makes a lot of sense. Interesting, too. And that kind of brings me to my next little side note here, which is the 10-year yields, which, again, last week we topped out. But we're making, Monday today, folks, we know that the U.S. government didn't shut down. They basically kicked the can down the road for 45 days. There's potentially kind of like a little civil war going on in the Republican Party about the leadership there, which actually, if he gets booted out, McCarthy gets booted out, then it becomes much harder to pass a new spending bill. But I will say this is that last week we talked about this 4.6, 4.7 level here. So far, that's the trend line. The question is, do we break it? And if we break it, I don't have big resistance on the 10-year until we get up above 5%, 5.3%. So again, really big, important level right here. If we flip over to the daily chart, the one thing I just draw your attention to, this candle right here, it's hard to see. I know you see that tail at the top. This is called a topping tail. And it's valid for a reversal signal as long as price does not close above the high of the tail. Right now, that's at around 4.69%. We're trading at 4.676%. So this topping tail, you would still take it as a bearish signal per technical analysis for downside in yields off of this level. But if we close above it today, tomorrow, or whenever, it is negated, and then you potentially have another leg up. But the one thing I would say to you, Ben, is, and one of the concerns I have is that yields have really shot higher here recently. If you just go back to September 1st, yields were basically 4%. Now we're at almost 7%. Is there a risk here of contagion of financial crisis? Is that potentially one of the reasons why Bitcoin got a little pop, or is it just seasonality? What do you think here in terms of what's going on?
Well, I think one of the things is, at this point, we know that the correction by the S&P so far was nothing more than, theoretically anyways, just a seasonal correction, right? I think there is a risk of it turning into more than just a seasonal correction. That doesn't mean we can't get some chop in the meantime, right? Like, it could, the S&P certainly could go back up. It likes to sort of go back up and retest the 20-week SMA at some point is what I would guess. When that actually happens, I don't know. The 20-week SMA is all the way up at just around 4,400. But I think the bigger thing going on right now is there's this idea that we've talked about for a long time, right? And I think a lot of people are just sort of impatient when it comes to dealing with the recession risk materializing. And I think it is starting to materialize in the next few months. Okay. And I've been someone who's been pretty adamant that we have not been in a recession for the last 2 years. But there's something that I think is very, very concerning when you look at the employment data. So if we were to look at say just the unemployment rate, we know that it's at 3.8%, right? It's relatively low right now, but I'm sure everyone is familiar generally with job openings. And what I want to mention, let me just pull this. I'm trying to pull this chart up. Job openings have been coming down very, very quickly. Okay. At this point, it has basically just taken it back to the prior trend, right? That's the correction. It's just taking it back to the prior trend. The risk here is it going well below the prior trend. I think that's the bigger risk. And we have a risk metric for this, and it looks like this, job openings risk metric. And look at it right now. It is shooting up. It is shooting up.
Wow.
And I think the reason why that's important is because we know there's been a lot of layoffs, right? There's been a ton of layoffs recently, but there's also been a lot of job openings to sort of absorb those layoffs.
Mm-hmm.
And I think that the issue is, well, what happens if we get to the point where people are getting laid off, but there's just not a lot of jobs? And so I think there could be some contagion event, but I think it's going to be brought forward by maybe a weakening labor market as well. And I don't know. I mean, it's hard to know like whether, cause or effect, right? They sort of all happen, but I'm looking at this job openings risk and I'm saying, look, this is really high. I mean, the risk is at 0.904. And normally when this goes up, the S&P is not doing so well, right? I mean, and in both of these cases, we did have some pretty epic rallies by the S&P, but it still trended downward. And I'm starting to wonder, I'm like, is this the downtrend that people just aren't believing yet? Like, is it starting and we just, no one believes it? But the more fascinating thing is, well, if the job openings risk is up so high, why is the unemployment rate not moved? Look at this. Look at the unemployment rate risk. You see how it lags job openings risk, right? So job openings risk goes up, unemployment rate risk goes up a couple months later, right? And so I'm looking at this thinking like maybe the unemployment rate is going to start making a significant move to the upside here by the end of the year or early next year. And that could be what actually sends those yields, back down. Because again, I mean, right now, what is the 10-year? Like 4.7 or something? What happens if it goes to 5%? People in bonds get crushed. I mean, they've already been crushed. And then something breaks somewhere, as you said, and then the Fed is forced to pivot. But it's not until after a pivot that job openings even tend to bottom, right? Like, look at this chart. Like the S&P tends to bottom after job openings bottom as well. Job openings are still going down, right? Like there's no clear indication here that they've bottomed just yet. And we also know that job openings don't tend to bottom until after the Fed pivots. So that's kind of what I'm looking at. I mean, I think you're right. I think there could be a contagion event, but who knows? It could take months to play out.
Yeah, for sure. Now, one of the things we've seen the dollar just unstoppable, right? You just mentioned we're in I think the 12th up week in a row so far. We'll see where we end this week, but we've definitely had the 11 up weeks prior. It's so interesting to me because if you looked at crypto Twitter or whatever you want to call it, X, 2 months ago, it was all about de-dollarization. I mean, that was the hottest term out there. The dollar is going to collapse. And then, it's a funny how these charts just do the opposite, right? I mean, people get bearish on the dollar rips higher. Right. Is the dollar going higher because rates are going higher? Is the dollar going higher because the rest of the world's in a much crappier position than the US? Is it like all of the above? I mean, what are your thoughts on the dollar?
I mean, I think it's a combination of all of that. I think that this is just a search for lower risk stuff. And the U.S. economy, while I think it is showing some signs of weakness, it's not as weak as, say, its counterparts elsewhere. And so people are seeking the relative safety of the dollar. And I think the issue with that is, the thing too, is that we know liquidity is drying up. And when liquidity dries up, cash can be a safe haven, right? I mean, that cash can be seen as king at various phases of the market cycle when asset prices are going down. And remember, the Fed wants asset prices to go down because they're not going to say that, but it would be great in terms of getting inflation back down. I looked and I was trying to figure out, when is the last time the dollar put in 12 green weeks in a row, right? I mean, I don't know if this is going to be a 12th green week or not. We'll have to wait and see. But believe it or not, the last time I think was over here in 2014, right? I believe this was like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Yeah, this was like at least a dozen green weeks in a row. And then what happened, right? At some point we got a little bit of a pullback here on the dollar, which I'm sure led to a lot of people thinking, all right, now it's going to go back down. But then it just continued to shoot up, right, into the early part of 2015. And so I think that's the concern is, at this point, I think markets are sort of discounting it and saying, all right, it's no big deal. It's still well away from the highs. What if we fast forward 3 or 4 months and now we're way up here? I think that is a likely scenario. And Gareth, this is probably one of the things that is going to force the Fed to pivot, I think, in 2024, is that there's not going to be liquidity. And that I think the dollar is going to force them to.
I think you're right about that. I think the dollar strength, and even again, my concern going back to yields is that as fast as yields are rising, I mean, we know basically one of the things I'll bring up is we know that in March banks essentially collapsed Silicon Valley because yields were basically hitting 4%. Well, now you're approaching 5%, and we know the housing market has essentially not decimated in terms of prices collapsing, but it's just frozen. It's frozen at this point. Unless you're a cash buyer, then you can do something. But again, that's about it here. And then just going back to the dollar, I wanted to show this chart. This is an amazing trend line on the weekly dollar chart. And again, we see the 2, 4, 6, 8, 10, and we're now on the 12th green candle. We are approaching this trend line again. And we can see over here it pulled back. Here when it hit, it bounced. Over here, it kept on bouncing off. So this is a great long-term trend line going back to 2021. And you brought this up, and I had it up on my chart too, is if we go back to 2014, here's that move up, 12 weeks up in a row. I actually used it just to measured move here, about 8%, just over 8%. And what's interesting here is if we replicate that 8% move here, right, we get essentially just above that trend line. So a pierce of that trend line right there. And so, again, all we can do is guess about things, but I would think you and I would be in the agreement, and is that you're probably getting to at least some sort of minor pullback like we saw in 2014. And we have the trend line here and the measured move to kind of replicate and give us that synopsis. But the question, like you brought up, is it just going to be a small pullback before we rip higher, or will it be a top where we start to head back down?
Was that pullback? I'm just curious. I don't remember. It was the pullback in 2014. Did it occur in mid-October? I feel like I remember that
question here. Let's take a look. Yes.
Okay.
Wow, that's freaky.
Yeah.
That's
interesting, right?
Point.
Yeah, mid-October, and we're about there. And what's also interesting, by the way, is look at the I have the euro chart up against the USD, against the US dollar.
Bring that up.
This looks like these distribution phases where you get sort of like 1, 2, 3, and I'm thinking, all right, well, the dollar, I mean, 12 green weeks in a row, right? Like I've been very bullish on the dollar for a long time, but even those bullish people on it, right? We were going to admit that at some point it's going to have a pullback, right? Like nothing, the markets move stochastically. I'm like, well, at some point, I guess what would happen is the euro could bounce back against the dollar, right? And maybe it even back tests this or something, right? And then it continues to go down. And we could get an example where Bitcoin or risk assets start to sniff this out. So I even would wonder if you get a point where the dollar starts to pull back, but when it does pull back, maybe at that point Bitcoin is actually starting to pull back itself, and people are gonna be like, well, why is Bitcoin pulling back if the dollar is down? It's because people are starting to worry about the next move by the dollar.
That's
not
right.
not the one that it's currently in. And yeah, so I think that's the thing to look at is if the dollar gets this pullback in mid-October, just like it did in 2014, what happens in November, December as the Fed keeps draining liquidity.
Yeah, and I think that's a great point. Absolutely good point. Now, flipping to kind of maybe the last topic to go over, let's go over the S&P 500 and the NASDAQ here. And, I'm still in the camp, and I've been in this camp, that we do have a breakdown in the markets, that risk is being loosened. I think, or I shouldn't say loosened, but basically pulling back from risk. And we saw this with Bitcoin, interestingly enough, is that if that's furthest out on the risk curve, if crypto is, those topped out in the recent move. And when did Bitcoin top out? What was that, back in August? Check that, July. So July it topped out, and now we've seen the stock market roll over. The S&P 500 put in its high in late July too, actually. So almost identical, just a few days later than Bitcoin. And we have broken this upsloping trend line. So the question now is, are we in the camp where we think the equity markets are headed back to their October lows of 2022, which would be a significant corrective move? Or is it going to be just a shallow pullback with a move back up? So I don't know if you have any views on this in terms of charts, or if you have any things to share with us on that.
Yeah, I mean, I normally in pre-election years, we get this October, September correction. And that's what normally knocks Bitcoin into a downtrend. And I mean, look, at this point, Bitcoin, it is a lower high until proven otherwise. Now, look, it could turn out to be something else, but I will point out again that in the pre-halving year 2011 and 2019, Bitcoin topped out in the summer. Okay, and in both cases, there were lower highs throughout the rest of the year, but they were nothing more than lower highs, and it pulled people back into the market. and made them think that that it was over, that the secondary scare was over. But when I look at the S&P, we did just have a pretty big correction. This is like an 8% drop in August or September. So like, while my bias honestly is that it will likely go lower eventually, like I also think there's a case to be made that you can back test this, the 20-week SMA, you can back test the 21-week EMA at some point. And I wouldn't be surprised if something like that happened. And again, it could happen in October, right? If it could happen in October. But again, going back to the sort of this recession risk, is that the market typically doesn't bottom until the Fed starts cutting, after the Fed starts cutting. And so it just, to me, and I've been saying this forever, right? It feels premature to just declare that the worst is over when we're so late cycle, right? The Fed is still, we're still pretty far, so many rate hikes behind us, liquidity keeps drying up. I just think that there is a risk that while this could get a temporary bounce, that we could see a larger drop the downside.
And I think one of the things you brought up, which I think is fascinating, is, talking about, maybe a retest, a rally back up to retest that kind of resistance line now. And if you think about it, we just talked about it, and this is what I love about the No Shill Zone, folks, is it's about putting the pieces of the puzzle together. Here's the data from many different things, and then you can kind of piece things together to make sense. And what I mean by that is, we just talked about the dollar and the dollar moving up. And we know that the stock market tends to sell off when the dollar goes higher. We know that the stock market tends to sell off when yields go higher. Both have been pushing up. We know the yield is into that 4.6 to 4.7 resistance level. We know the dollar is coming into its 12th week up into October, where in 2014 it had 2 weeks of a pullback. So if you think about it, a retest, meaning a rally back up in the markets in the short term that eventually leads to another move down, makes sense. Because again, if the dollar pulls back and yields do pull back, like history shows us, then that would be enough to trigger a little bit of a pop back in the S&P 500, as people kind of say, the deep breath, right? Oh my goodness, thank goodness the yields aren't going straight to 5%, or the dollar's not just going straight up nonstop, it's pulling back a little bit. So
right. And the other thing to realize as well is that in the short term, yields going down could of course be bullish for stocks, but at some point, I don't know when, but at some point, I'd imagine the next, like, let's call it 6 months or so, yields going down will likely be very bearish for stocks, because it means that we've gone, the Fed went too far, and that the recession is now finally upon us, right? I think the hardest thing with recessions is that it just takes so long for for these lag effects to be felt, and it leads to people prematurely. Look, the path to a hard landing is to think it's a soft landing, always. Right. You never really get a hard landing, think it's going to be a soft landing first. So I think we're going through the same motions, I imagine, and we'll have to wait and see how it plays out. But look, we've been going for about 30 minutes. If you guys are not subscribed to Gareth, make sure you guys do so. We are here every Monday, well, mostly Mondays, unless I'm sick or something, but we're traveling. We're here every Monday, if we can be, to provide these updates to you guys, data driven. We know markets are stochastic. We just want to do the best we can. So make sure you guys subscribe to Gareth down. Links are in the description below, and also check out his website. And we'll see you guys next week.
Yeah, absolutely. And guys, same thing. Check out all the links below. You'll see Ben's stuff there, all his website, his Twitter, his YouTube, and like Ben said, we're here to just do our best to present the data to you with no bias. Just this is what it's showing us. You guys take that information, you do what you will with it, but at least you're not getting the kind of the nonsense emotional crap that is pretty much permeating the entire internet. So thanks for tuning into the No Shill Zone. We'll see you next Monday, guys. Take care.